Welcome to the 2021 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me on this weekend edition, March the 5th, 2021. Today, I would love to talk to you about two things. The persistent high unemployment rate, despite numbers that we are seeing, and this idea of inflation that's going to happen, temporary inflation that's going to happen in food, gas, and utility prices before the massive depressionary deflation happens in the economy, which is going to allow the super rich, the top upper 1%, to buy up everything from houses to land to water, which they're doing now already. So let's get right into it. Be sure to subscribe to this channel. Preach to me for the latest 100% unadulterated, unfiltered financial use for the United States and beyond. Thank you very much for your support, and we will get started right now. As you can see, everybody's getting used to springtime, and a lot of restaurants are preparing to open back up outdoor dining in some parts of the country. And the jobs report came out today at 8:30 a.m. We get the job numbers, and according to reports, job growth in February may signal the start of a hiring boom as the economy reopens. As you know, a lot of the economy's pivoted on the vaccine. And it's also pivoted on the employment numbers. They said, according to CNBC and MSNBC, they said most of the increase in employment was in leisure and hospitality. The sector, as you know, was hardest hit when the economy shut down over a year ago. So this is our 1-year anniversary being in this pandemic, ladies and gentlemen. And they're painting the picture that the unemployment rate is at 6.2%, is down from 6.3%. Wow, big change. But they're painting this picture that the propaganda from the media and others are saying that things are improving. So that's the good news. The unemployment rate dropped 0.001%, ladies and gentlemen. And so the economy added 379,000 jobs, if we were to believe these numbers. And let me show you here. If we are to believe these numbers, that they put out, that the Bureau of Labor Statistics put out. Now, this is well above the 210,000 that's expected, with most of them being, like I said, in leisure and hospitality. Now, economists and experts say it would not be surprising to see multiple months now of job growth of at least 500,000. Wait a minute now. I thought we were losing 700,000 jobs for the last 34 weeks have been losing over 700,000 jobs, for bringing our total to 40 million Americans who are unemployed right now. And remember that we also have another 25 million Americans who are underemployed that's not counted in the statistics. And what I mean by underemployed is, let's say you're working 2 part-time jobs, or you're working 3 gig economy jobs, or, Uber, Lyft, or Amazon delivering packages. And you have 2 or 3 of those part-time jobs to make up for your full-time job that you lost. So you're underemployed, meaning that you may have a master's or a doctorate degree in something else, but you have to end up doing that because in your area there's no jobs per se, no good paying jobs. As you know, that's a rarity. So anyway, stock futures surged on the report today, right? And bond yields jumped. 10-year Treasury moved up to 1.61 before falling down to 1.57%. Now, the thing is, the job market numbers have been manipulated. As you can see here, the Dow Jones, it was down half the day. Then all of a sudden it rallied up 200 points today. S&P, NASDAQ up. This is all good. But you have to remember, the stock market is not the real economy. So the good news is that they're starting to stop the jobs bleeding that we've been experiencing week after week, And also the Democrats reached a deal on aid, allowing $1.9 trillion relief bill to pay for it. But the question is, who is going to pay for all of this debt? The United States is the world's largest debtor. Look at this. This is the U.S. national debt clock. We're at $28 trillion, like I've told you previous time before. And this is never going to get paid back. And their goal is to try to inflate your dollar bill, hyperinflate your dollar bill, and inflate this debt away, but it's just impossible, okay? Look at the number. The average debt per taxpayer will be $223,000. That's not even covering the average price of a house and all of the liabilities here that we have. The median income in the United States, if we strip away taxes, after tax and everything, is $35,366. There's no way that we can cover this debt. The debt is higher than the U.S. gross domestic product. Look at the gross domestic product right now, $21 trillion. Our debt is at $28 trillion. So just like when we have a checkbook and we bounce and we overspend and we overdraft, the whole U.S. economy is overdrafted right now, and they're bankrupt. And that's why we're going to have pandemic-related job and benefits derail the stimulus plan. Well, that's old news. Now the stimulus plan has moved on to the Senate. But listen, despite rising inflation, experts say the Fed won't budge on rates. Well, they can't. They're in a corner because if they raise rates, Jerome Powell, Fed Trump knows this whole economy, this whole house of cards is going to come crashing down. But the rates are going to rise because hyperinflation sets in. They're going to have no choice but to raise these rates, according to most people. And the reason why we're seeing the 10-year bond and all of this treasuries rise is that people and investors know that something big is coming. So they're getting into safe assets, hard, physical, tangible assets, gold, silver, bonds, municipal bonds, treasury bonds, more of the safe assets, and then cash. Cash is king. The dollar index went up by 10% today, and so cash is king. Now, that's why I tell you guys to get prepared with food, water, cash, medicine, supplies, because you don't want to be waiting in line like the folks in Texas and other places at these Walmarts and Targets trying to get in the store for what little supplies are left, because China is not going to be in these India, Thailand, the stuff that America gets all the goods from, including Walmart. They're not going to be supplying the U.S. with more and more goods this coming year because, as you know, we're in a trade deficit. So with China and other countries. And that means that they're not going to be shipping that many goods. So you can see shipping delays coming up this summer and into the fall. So get your supplies now, even if it's just 1 or 2 supplies per paycheck or per, benefit period. Do it. I'm started. I've been started, of course, but I confess to you that I'm still not ready. And this has been going on for the last 2 years, 3 years. I just don't have enough food, water. I don't have enough medicine. I don't have enough supplies, garden supplies to sustain myself for this long haul thing, because this next depression, ladies and gentlemen, that's already started, is going to last 10 to 12 years at a minimum. Some economists say 15 years. So we're going to see more and more store closed, more and more automation taking over our jobs and our good paying jobs in America. And that's why these companies, these big multinational companies from Walmart to Target to Costco to Sam's to they're going to continue to not hire regular Americans either for high paying jobs or regular jobs. They're going to continue to automate. And that's why this economy and supplies in America is going to continue to go down. So get your supplies, continue to prepare, and because hyperinflation is coming in the beginning, and then after that, we're going to fall into massive deflation. But the time we fall into massive deflation, though, it'll be too late because no one will have any actual liquidity, cash, and money, because it'll all be sucked up by this trying to control this debt and this and this inflation, and people paying these bills. Paying their bills and just trying to live and survive as they see stores close all around them and infrastructure crumble all around them, just like it did in Texas. So continue to prepare. You guys have a blessed weekend, and I look forward to talking to you very soon. Thank you very much.